What's up, everyone? Let's talk about Palantir, PLTR. It is steeply discounted, down about 47% from its peak of $45 per share. I believe now is a great time to get in on PLTR. In this video, I will discuss why Palantir is a misunderstood company, why it recently sold off, what happened to the Q4 earnings report, why I'm so excited about Palantir, why is Cathie Wood buying Palantir, and what I plan to do next. Of course, I will also provide you my price prediction, so you probably want to stick around. Swadee, this is Hello in Thai. My name is Anthony and welcome to Quantum Finance. If you're a returning viewer, thank you for your support and welcome back. If you're new, welcome. Please help us reach the 10K subscriber goal by hitting the subscribe button below if you have not already done so. Also be sure to like, share, and hit the alert bell button so that you can get my latest video. With that out of the way, let's get right into it. Palantir Technologies Inc., or PLTR, builds and deploys software platforms for the intelligence community principally in the United States. Palantir's CEO is Alex Karp. Palantir was founded in 2004 by Alex Karp and billionaire Peter Thiel. Peter Thiel is the chairman of Palantir. For those who may not know who he is, Peter was a founder and former CEO of PayPal, who later sold PayPal to Elon Musk. As you all know, Elon is the CEO of Tesla and SpaceX. Anyway, Palantir is based in Denver, Colorado. I like to say that Palantir is one of those companies that is not well understood and is a very controversial company. It is not well understood because we're dealing with data. Let's face it, a lot of Fortune 500 companies collect data. However, there's so much data being generated and collected that most companies just don't know what to do with them, nor do they have the resource to look at them or the know-how to deal with it. For those companies that understands, have the resources, experience, and have the know-how to transform those raw data into insightful information so that it could help the company and its senior management to make key decisions to grow the company, save money, improve on their products and services, etc. These companies will be king. This is where Palantir comes in to fill the void where most companies are lacking. Palantir's mission statement reads as follows. Our mission is to help out our users, the people doing the hard work on complex, real-world problems. We do this by writing software that enables effective analysis against complicated, data-driven problems. Now, that mission statement alone is very open-ended. You can look at it this way. Palantir has three key products that are AI-driven. Gotham. It integrates, manages, secure, and analyze the customer's enterprise data. Basically, it is the anti-terrorism software, the ultimate government tool. Second, Foundry. This is the platform that reimagines how people use data by removing the barriers between the back-end data management and front-end data analysis. Basically, it transforms raw data into actionable information that companies can take. You can view it as an operating system of the modern enterprise that unlocks growth and provides insight for decision-making. 3. Apollo. This is a portable SaaS, or software as a service platform that can be deployed and operate anywhere around the world. Think mobility, an advanced version of Gotham and Foundry, or the next iteration AI software in its product line. The problem why people have a hard time to understand Palantir is because it's an open-ended company. It's an AI software that can do multiple things and apply in multiple industries. In its own way, it's like a hybrid AI technology company combined with a little consulting solution company to its clients. But bear in mind, it is not a consulting company. By consulting, I mean in a sense that it is guiding its customer in the right direction based on customers' needs and wants by using its software, by feeding it with its data. It is a data-driven software technology company. Palantir integrates the data and map it into useful information and value-added knowledge for actionable decisions. Palantir is also a data mining company using the same technology it learned from PayPal. Palantir is not a pure software company. The second issue is that most investors don't like the fact that Palantir works closely with the US government. For instance, they work with the Immigration and Customs Enforcement Division of the US government. In a way, think of Tom Cruise's Minority Report movie where the government can make predictions on certain people or events before it even happened based on historical data collected. This type of profiling is the fear of investors and citizens of what Big Brothers could become with such tool. It creates a mistrust. I'm not trying to get into the politics of this, but this is the reason why people don't like Palantir. And it is not the main subject that I want to discuss in this video. video. Back in September 2020, Palantir began trading its stocks to the public via a direct listing process, or DLP. In a DLP, the business sells shares directly to the public without the help of any intermediary or underwriters. It did, however, have about 80% of its shares locked up with an expiration date on February 18, 2021. I will revisit this later in the video. The New York Stock Exchange established a reference price of $7.25 per share, valuing Palantir at about $16 billion ahead of its official debut. Bear in mind that Palantir has been in business for the past 16-17 years and has yet to become profitable. So this $16 billion valuation is raising a lot of questions from investors. Investors are skeptic about Palantir and its ability to make money. That is because it's heavily involved with the Department of Defense, FBI, CIA, police, and military. Their concern is, does Palantir have a large enough TAM, the total addressable market, to make it a viable investment? Palantir's stock price has been beaten as of late after it peaked at $45 in January 27, 2021. I personally think this is a good buy as its shares are being steeply discounted by the recent activities, misunderstood earnings report loss, lockup expiration, and of course, the recent market downturn. Let's look at its Q4 earnings report. On February 16, Palantir posted an unexpected loss for its Q4 2020 earnings report. Palantir attributed the loss to stock-based compensation and to employer payroll taxes. But if you look at their earnings report, their revenue actually rose by 40.4% to $322.1 million for Q4. Overall, in 2020, Palantir generated a whopping 47% revenue growth. This chart tells us that it grew its revenue from its top 20 customers from $495 million to $663 million and increased its percentage of revenue from its top 20 customers from 67% down to 61%. This is a great thing as many investors were concerned that it relied solely on its revenue from a small sources of customers. It has increased its revenue per customer from $5.6 million to $7.9 million. That's a 41% increase. The adjusted gross margins are also increasing for the full year from 71% in 2019 to 81% in 2020. Palantir did improve their adjusted operating income in Q4 and for the overall year 2020 from a negative 45% in 2019 to a positive 17% in 2020. Their expansion plan grew the company by 104% year over year. This is very impressive. It is also gaining more top-tier customers. For their commercial-based revenue, they grew it by 23% from $397 million in 2019 to $482 million in 2020. This is also a great news considering that they were 100% government-based revenue company not too long ago. They now have managed to change the mix to a 55.8% government and 44.2% commercial-based revenue company. What this says is that they have more room to grow with commercial-based companies. Yes, while Q4 was a loss at $156.6 million, it went from a negative 31% in adjusted operating margins to a positive 32%. That's an impressive 63% increase. For the overall year, they went from a negative 45% to a positive 17% in adjusted operating margins. Again, this is at a 62% improvement. Palantir provided its Q1 2021 outlook with a revenue growth of 45% and adjusted operating margin of 23%. For the full year of 2021, they expect revenue growth in excess of 30%. Palantir has provided a projected revenue growth to $4 billion or more by 2025. This is a significant increase from the 2020 revenue of $1.093 billion or by about 4x plus growth within 5 years. I personally think Palantir is under-promising this with a lowball number and thus will be over-delivering, adding value to its shareholders in the future. Guys, Palantir is very smart at this. It is just managing the investor's expectation. I think you have to understand these numbers before jumping to the conclusion that Palantir is not doing well. For the short term, yes, it is losing money, but the facts are telling us that Palantir is a growing company. I think investors are just impatient and for the fact that they don't fully understand what Palantir is all about. Okay, back to the lockup shares. On February 18, 2021, Palantir's stock sank as its lockup expiration allowed 80% of its shares to be traded on the open market. Soros Fund Management, which owned 18.46 million shares at one time, has stated that it will divest from Palantir and stated that, quote, SFM does not approve Palantir's business practice. SFM made this investment at a time when the negative social consequences of big data was less understood. SFM will not make an investment in Palantir today, unquote. This is obviously tied to the work that Palantir was working directly with the Immigrant and the Custom Enforcement Division. As you may recall, this is related to the past immigration issues under the former president of the United States. While other investors are fleeing, both Cathie Wood of ARK Invest and Goldman Sachs have been loading up on Palantir during this downturn. If you're new to investing, and if you don't know anything about how to invest and what to invest in, and if you just follow Cathie Wood of ARK Investment, meaning just buy Palantir when she buys Palantir, you can't go wrong with your investment. Just remember that Cathie Wood has a 3 to 5 years outlook on her investments. Cathie Wood is buying the dip, and her conviction of Palantir is very, very strong. On a high level, that's about 3 to 5 million shares that she just bought last week during the dip. Now let's look at this daily chart. As you can see from its initial days of trading, it was traded in the $9 to $10 range. Then around in November 2020, it went parabolic, reaching as high as $33. It did retrace back a bit and consolidate between the $20 to $30 range. Then on January 2021, it spiked up again due to short squeeze and reached an all-time high at $45. Since then, it did retrace back due to shares being unlocked, disappointing earnings, and the overall market sell-off. I think right now is a great time to enter on PLTR. I do have to disclose that I did once own 500 shares of PLTR, but sold 70% of it when it was in the $37 to $38 range. This was right before the earnings report and the shares being unlocked. Because of the overall market sentiment, I will be cautious to buy in blocks of $500 to $1,000 at a time and cost averaging in. I state this because if you look at Palantir's daily chart, it has several strong support levels that are now becoming strong resistance levels. My price target for Palantir is set at $31 to $33 for the next 6 to 8 weeks. However, I'm planning to hold them for a long term, meaning for 3 to 5 years out. That is because I do believe Palantir will be a powerhouse in its market segment in the future. Remember, when you think about Palantir, you have to think of what it can become and not what it is now. Palantir is projected to grow by 400% in 2025. Again, I think the mainstream media and majority of investors have failed to understand and see what Palantir's true potential as a company. And of course, it doesn't help that Palantir has been around for 17 years and still not making any profits. As a data analyst with a master's degree in engineering management and business analytics from the San Jose State University's MBA program, I fully dig Palantir. This is what they teach us in the data analytics classes. It is right in my field of expertise and formal education. Palantir is the future. You want to invest the future you want to see. I believe the total addressable market, or TAM, for Palantir will only grow as more and more companies realize how important it is to have such AI software capability on their side. And one thing about AI software is that it gets better and better as it gets more exposure to more and more data. Bottom line, Palantir is a data-driven AI software tech company. If you find the video of value, please like, share, and hit the subscribe button if you haven't already done so. Thank you, and let's go make some mullahs!